Hi, my name's Amanda Mazer, and this is my husband, Phil Mazer, and we have the podcast Beyond the Numbers. So today we're going to cover a few topics, mostly financial and accounting with some business leadership tips, and let's get started.
Let's go.
Okay, so first one, loopholes that your CPA won't tell you about. That sounds like a loaded question. This came up because tax season is approaching. We're talking about doing our own taxes and talking about how we're paying ourselves and things like that. And I'm sure there's some general knowledge that some CPAs don't want you to know. I don't know. That's why it's a subject today. So anything come to mind when I mention that?
Yeah, I mean, I'll use your words and try to play off them because, I think, first of all, your CPA would want you to take advantage of whatever you can take advantage. But the fact is, not a lot of people can take advantage of what you referred to as loopholes. I would call them laws or rules. And the reason why somebody wouldn't tell you, why a CPA wouldn't tell you, is just because it's not worth their time to even have the conversation with you. And so I think that's one of the first things that comes to mind is if you're not doing certain things, if you're not making profit at certain levels, you don't even have the ability to take advantage of some of these things.
So what you're saying is small business owners need to educate themselves because their CPA's job is to do their taxes. Their job is to be educated in coming into
the CPA definitely can be the person and should be the person to advise you on tax strategy. But if your business isn't doing well enough to begin with, you can't even take advantage of that stuff. So they're not going to bring it up to you. And if you're not at a point where you're making that much money, you're probably not using that CPA who's also a tax advisor. You're probably just paying for somebody to literally do your taxes and get it done in the
right. So
probably
should
the cheapest way possible.
They be looking for CPA/tax advisor? Is that something that they need to look at? Because we can go back into the fractional CFO, bookkeeping, accountant roles again and look at that and go, well, you don't know what you don't know. So you think you need an accountant. And maybe you need a bookkeeper. Maybe you need all three. So are we saying once your business gets to a certain size, you need to worry about the qualifications of your CPA?
I think you need a CFO first. I mean, but that's the true story. I mean, you got to look at all the functions of the finance department and understand that taxes are a specialization. They're something that need to get done. Once per year, you have to file your federal and state taxes. But
you just said that so Southern.
What?
File. File. He's actually from Pittsburgh.
File.
There you
I don't
go.
know. Is it?
I'm surprised we don't have Steelers stuff back here. We have everything else.
One syllable or two? Let's not talk about Steelers. Okay. There's the devious laugh. All right. So, but it does come down to, well, how do I know if it's even relevant to me? And this is why we're having this conversation on our podcast, because we help people figure this out, because the same thing doesn't apply to every person. There are some business owners or just people in general who I would say, just get your taxes done in the cheapest way possible. Mm-hmm. There's others who I would say you need to spend some money and invest in a person that's going to be with you for several years.
Okay, so that just sparked something in my mind. So over the last few years, we've had small business owners that we work with come to us and send us an email that the CPA said they needed all these things for their taxes. So we've talked about tax prep already, but let's go into that a little bit more. What are some basics that say we're talking about self-help? Maybe you don't, maybe you're not big enough for a CFO and you're just crunching the numbers literally like you think you're going month to month, which you shouldn't be doing. We've already covered that. But let's say that they are, and they're going to go get a CPA and they get this very overwhelming email from the CPA saying, I need A, B, C, and D. How can they kind of digest that, or what can they do throughout the year to kind of familiarize themselves? Are there hot topics like we've talked about certain reports or bank statements or something? Should they be doing some of those things, saving their bank statements in a certain spot every month so they can just grab that file and go? What would that look like?
I think they should look in the mirror and ask themselves, what has been my reality? Because the fact is, all the things that you just mentioned are what you need to be doing. They're daily, weekly, monthly disciplines.
Right. Yeah. So what are those things?
Well, first of all, do you have a system? Are you in a QuickBooks or Xero or something like that? Or are you so bad?
Are you sorry?
Are you so bad?
Are you just a sorry piece of crap and don't know anything? That's what it sounded like.
I didn't say that.
That's what it sounded like. Okay.
They have to understand the truth. If they're going to find a credit card statement or bank statement or both.
Oh, don't even get me started. Credit cards are on my list.
Well, I mean, if that's where you are, like that's where you need to start. You need to get organized.
All right, next question. So let's talk about chasing profit and not clients. So that is your question. Do you run into, in your CFO consulting and advisory stuff, finding clients that are chasing numbers or viewers instead of the profit or something that actually fits into their business?
Well, it's possible. I mean, I think people get excited about gaining business, gaining clients, customers, what have you, because that's part of the game. I mean, sales and marketing is part of the game, but profit is also part of the game. So, I mean, there can be this miss where they get excited because people want to work with them. But if they're not looking at how profitable they are, then they could be kind of bringing on the wrong clients, which I think is what you're alluding to here. So that's why the profit needs to be part of the question. It's really important that businesses understand how much money they make per client, and it can vary depending on what they do. It could be a certain client type. It could be a certain type of work that they do that is worth more than something else that they do. If they do multiple things, maybe they're complementary, maybe they're not. But there's only so much you can do. So understanding your capacity based on your current staffing is one thing. How much money can you make with your current makeup of employees? Because it's not that easy to just add another employee.
What about, so we work a lot in the property management sector. That's kind of been our niche for a while. And tell me if I'm wrong, but when I think about something like this, it would be like a singular set of rentals. I've heard you talk about some of our clients that have had, like they do student housing. And then some do like single family homes. Mm-hmm. So what if they're chasing an apartment versus chasing a single family home? One would be more lucrative, you would think. Yeah. So instead of chasing clients, chasing profit, instead of trying to get like a bunch of small little apartments rented, maybe you would want to, I mean, tell me if I'm wrong, if this is the right train of thought.
What they need to be considering is who is their actual client. So in your example, you're talking about, let's say you have an apartment building that has 50 units in it. Mm-hmm. You've got 50 tenants that you have to place, potentially more, multiple. But are they your actual client, or is it the owner of the building that's your actual client? So there can be, we go down a lot of different scenarios with that, because you could also manage.
Well, the risk changes too, right? The bigger the client.
Yeah. You go to 50 houses though that have 50 different owners. That's 50 different customers you have to deal with and have relationships with and things like that. So all of that fits into your pricing model, but you also have to understand your fulfillment model. How many people on your team does it take to manage 50 units or 50 customer relationships?
So if you're chasing the smaller amount, you might have more admin work and more room for error.
Well, definitely. But I think you also just said the risk factor. Mm-hmm. The risk of losing one client versus 50 mm-hmm. is a lot different. So again, we don't have the answer for this one. The point is you have to look into what is your answer. Because if I'm going after, there's a concept called customer concentration. So that's really when we talk about risk is if you have customer concentration, that means if I lose one customer, how much of my revenue base would I lose?
Right. Yeah.
So that's a huge factor.
Yeah. I think we played on both sides of that fence in our business.
Yeah. Do
we want a lot of little clients or do we want some big ones? And I'm more scarcity mindset. I'm more scarcity mindseted than you are. So you're like big picture, big risk, big reward, and I like the petty little stuff, and that's where I'm most comfortable.
I think you just have to. I don't think there's a right or wrong. I think it's important to understand the choice that you make. If we broke it down into the most simplistic example, it would be I have one customer. If we had one customer, for example, in what we do in accounting and finance services, we kind of just have a job.
Right.
I mean,
yeah.
we're working for
an employee.
We're working for that one person.
Right. Yeah.
And in the example of the property manager example, if you're working for one landlord, you're more likely to do what they tell you to do.
Right. Yeah. You're not.
And again, it's not right or wrong. You can have good partnerships that way. It can still work. I think you just need to be cognizant of what you're doing. Next.
Okay. So this one is more of a QuickBooks question.
Okay.
A little more detailed, a little less vision, a little more
weeds
down in the dirt. Let's talk about payroll again, because I love payroll, and I can talk about payroll all day long. Actually, I just finished my recertification for my CPP.
Congratulations. Cheers.
Yeah. Hey, it's a big deal. It's a pain in the butt.
I know.
Okay. So syncing payroll accounts in QuickBooks. Okay. So I have a ton of experience in payroll. I don't quite have as much experience in taking maybe a third party and connecting it inside of QuickBooks.
Mm-hmm.
So that, in my experience over the last few years, I'm working exclusively with QuickBooks and payroll, and has been a headache. And we've seen some top third-party providers that have done really good jobs. Some have not done so good of a job. We've also done it inside of QuickBooks and had our own hiccups. But what would you advise someone who is looking at adding a payroll provider of some sort into their business, and some things that they might want to keep in mind? I mean, payroll taxes. I always bring that up, but it can be an accounting nightmare when you're not setting things up correctly. And if you're using a software like QuickBooks or any other accounting software, there are deep inside guts of the software that you need to make sure are lined up. And I think if you're a small business owner, you might not even know what you don't know.
You got to take ownership of whatever you choose. It doesn't matter what system you use. There's some, we can talk about which ones we've liked, but regardless of what you choose to go with, whether it's your payroll system, it's your accounting system, it's a CRM system, you have to be the owner of it, which means you just got to be clear on what you're trying to get out of it, but also what you have to do regardless. So in a payroll system, you have to pay your people, right? What is your objective? You're trying to pay your people. You're also trying to be compliant with tax rules, laws, whatever, and make sure that money goes to the right places. So, one of the things we've run into challenges with the tax side of things, and it sucks. It's frustrating. It's one of the most difficult things we do. But, when we're doing this for somebody, we own it. We have to see it through. If we have to get with customer service and we have to deal with state tax, we just have to do that. That's our responsibility if we've chosen to take that on for somebody. But if you're doing that inside of your own company, you have to be aware of that too, and you have to be willing to deal with that kind of stuff. So when you're choosing a provider, you really want to understand what they will and won't. What they will and won't do for you.
Because processing it and typing it in, and then timekeeping and even onboarding, all these little tiny things that fall into your lap could really be big liabilities if they're not done correctly.
Yeah, and there's an important part of this, which is the actual bookkeeping side of it. And you talked about integration with QuickBooks or syncing.
Yeah.
That's what you first said. And a lot of the softwares do sync with accounting systems nowadays. Most of them do. If they don't, then they're probably a little behind, but there's management to that, and that is complicated too. You have to understand. I was just doing something a couple of days ago in Gusto with one of ours. There's mapping you have to do. Mapping means tying a pay code to a general ledger code in your accounting system, and you want all this stuff to flow so that you have proper accounting reports. One example that I've dealt with over the years of doing accounting for other people is a lot of times when we bring on a new client that's been doing their own bookkeeping or just not using a professional to do their bookkeeping, is they will book the net amount of what's getting taken out of their bank account as their wages. And that's wrong. So what it's missing is it's missing the payroll taxes, and it's just giving the net amount. So what you're failing to see there is actually what you're totally paying your people, and they're not.
It's so complicated. I'm like, how can we make this as simple as...
They're not categorizing
it
anyway.
So when you process a paycheck, what you're saying is that the paycheck is kind of complex, and the fact that there is money inside and outside of the paycheck amount that is maybe not seen in that total, right?
Right. So let's say you pay somebody $5,000 in a paycheck, but you only get deducted $3,000 out of your bank account. Well, that's because
there's extra liabilities.
They're only getting 3,000. They're only getting in this. Let's say they're getting 3,000 taken out of your bank account. That means part of that money is less than that's going to the employee, maybe 2,500. There's another 500 of company money that's going to taxes. Then the rest is the employee's taxes that you're just sending on their behalf.
Yes,
so it's even less.
There's a lot. I mean, it's complex. That's why I'm good at it.
Yeah, it's complex. Yeah.
But so they are liable for more than the paycheck amount. So say they are paying an employee $5,000. They are going to be in charge of that $5,000 plus the employer side of taxes. So a $5,000 paycheck doesn't really actually mean $5,000. It's $5,000 plus the employer side of taxes. And like he's saying, they will deduct the employee's taxes from that. And then the employer, because they have an employee, is then on the hook for remitting employer and employee taxes to the appropriate states and IRS and all those things. And inside of that paycheck, it is broken down into different pay codes. So you have bonuses, you have reimbursements for employees, you have all these things. And those are tied to GL codes. And we talked about that in the chart of accounts. It's broken down to a bunch of GL codes, and you can set that up based on industry specifics or however. I mean, when you go into a software, they generally have like a bare bones chart of accounts that you can use. But where we see a lot of difficulty is the doing that payroll and the third party payroll provider then breaks things down. And what he's saying is you go inside and you have to tie the GL codes to the appropriate GL codes. So when it does come over in the sync, that the sync is clean and you can go in and you can hit match and everything's beautiful. But often that doesn't work.
No. And if you've managed to listen through all of that, you probably wanted to shoot yourself.
No way.
So you're just not going to do it. And this is what people do. And this is the experience.
They're
not going to do it.
We have processes and procedures that we have in place for a lot of the major payroll providers and our clients who are doing payroll outside of their accounting software and with those providers, which is great. And when those things fail, this is where QuickBooks accounting cleanup comes in for us. Is if that fails and you have a small business owner that just doesn't understand how it works, they're going to and then the next month it's a huge mess and it gets bigger and bigger and bigger. And then before you know it, you haven't reconciled any bank accounts in 3 months. And we have 17 payrolls that have been run and a million things all over the place that we're having to fix.
So just add this to the list of numerous things. This is why people aren't ready for their taxes at the end of the year. This is just one example of how complicated trying to do your accounting right actually is. So
that's why we're valuable.
If they're not seeing that,
well, if you're growing your business,
they're listening anyway.
Yeah, sure. Okay. Well, I'm not even going to say the slang I was going to say, beat the dead dog horse. Anyways. Okay. So let's move on to the next one. I just lean back. I can't see this, but I can see it just fine. Can you see it?
You're trying to act like me.
Yeah, I know. That's why I asked you if you can see
I don't even want to look at it.
Okay. So we could talk employee reimbursements inside of paychecks, but we're not going to do that because we're going to talk about this. Still adds on the small business side of things. Let's say there's a business who their main business is baking cupcakes. Okay. They bake cupcakes and they don't do cookies, but they keep paying this other company to provide them with cookies, right? So they can put it in their bakery. But then they decide, we're already bakers. It would just make sense if we had our own cookie company. So they're going to make their own cookies. Am I making any sense?
I don't know where you're going.
Okay. So what I want to know is how often do you see small businesses pay third-party companies or contractors, whatever you want to call them, to do some basic business for them. And they decide, I can do that myself. Let's start a second company inside of the company we already have.
Yeah, seen it, done it.
Yeah. What do you think? Do you advise that? Or do you just stay good at what you're good at and let the other people be good at what they're good at?
It can work. I think it can also fail terribly. But
another accounting nightmare.
There's fundamentals that need to be discussed first. I think when you talk about having a vision for a company, for your company, being clear on what it is that you're great at and focusing on that thing. Sometimes oftentimes actually there can be complementary things. But also, I think this is the key point, understanding where you are in the season of your business and your long-term goals. Is it the right time to try to focus on that thing? And I think what people have to go back to when this happens, when these good ideas come up, is what got you to where you are. Don't underestimate how much sweat equity you put into getting yourself where you currently are, because it's not going to be simple the next time or with the next thing. So you're going to have some wisdom that you can apply, but it's not going to be simple.
When someone gets to this point and they're like, man, I keep paying this company bukus and bukus of money of something that I could handle myself, what are the implications in that? So do we see a bunch of transactions going on inside of the business over and over again? Does it become a mess?
This is a nightmare, because let's say we were doing the accounting. All of a sudden we start to see some random expenses and we're like, what is this for? What is that for? Or we might, if they're in new categories, that we haven't seen before. But if there's things like labor or subcontractors, and we're already paying people to do certain things, but they're doing something new, all of a sudden your margins are going to start to
get a
little wacky.
Yeah.
So definitely, first of all, if you're doing something new, talk to whoever's doing your accounting about that so that they're understanding, because you want to be able to separate this. Sometimes this means setting up a new company.
Okay, so that was going to be my next question. So if you're in this situation, and do you just create like a new category with subcategories, and that is your new department so you have these employees that are, say, only in your A company that do A, B, and C, and it's inside under the same company, but it's a different department and it has all this stuff under it? Or should you create the new company? Why would you choose one over the other?
It's a very good and deep question. We could do an entire podcast on this.
Okay, so sum it up in like 4 sentences.
How committed are you? That's what I would say. How committed are you? If you are like, this is happening, we are committed, we're putting a whole team together for this, we're putting a whole business plan together for this, we have capital behind this, we can sustain cash flow this for 6 to 12 months of break even or loss, I would say create a brand new accounting system, separate everything. If you're just like dabbling in a new idea, create a couple of new account codes.
And just kind of watch.
Yeah. And also I would just challenge you as to like, are you really committed? Why are you doing this in the first place? Well, if that's how you answer, but
I'm going to try not to lose my thought.
But there are circumstances where this is very smart business making, and if you keep it in your same accounting system, does the collective profitability of that company with this new service, does it still make sense? Meaning, if I look at my total profitability, can I look at both of these things together, or do I really need to separate them out?
Well, in order to see the fruits of your labor and inside of separating that, you also need to separate the revenue. What's coming into your company. So 100%. how would you do that?
Well, you're gonna invoice separately for it. You would put in different revenue codes.
Mm-hmm. And so that would be another level inside of that.
Yep.
But I mean, I guess
this is where what people miss on this. It's not that hard to set up one new revenue code and one new expense code, for example. Yeah. Even 2 expense codes. Maybe you have a labor and you have a material. If you're selling something that's material based. What's missed is the overhead, like the admin cost, general administrative costs, because those are generally shared. So you can lump accounting, insurance, office expenses, all that kind of stuff. That gets under the gross profit margin, and that gets lost. So people tend to think like, oh, well, this is free. This is like, we don't have to pay for that kind of stuff. And incrementally, meaning like the next few dollars, it's not going to increase your overhead costs. But what happens is it's a distraction. Mm-hmm. So whenever we're talking about, hey, we need to do some extra accounting work because of this, well, everything starts to shift a little bit into this more complicated business model that is going to add extra administrative costs. So you can't ignore that in the long run. That's why where we get to eventually when people are really committed to this is we end up allocating a portion of those administrative costs to this other company.
How do we do that, Phil?
Oh, it's complicated. We come up with a cost model, and we do some analysis on how much time and effort it takes.
And then when
to
you
do like this.
Run your payroll, do you separate some of this cost out?
You can, possibly. We can do journal entries. Sometimes
we won't even get it. Journal entries.
We bill other entities back. I mean,
we'll do journal entries on another podcast. That sounds good. So basically what you're saying is if you find yourself in this position, think long and hard about it. Don't get distracted from what you're good at and stay extremely detail oriented in the tracking of all of these things.
If you're already doing things well, if you already have good disciplines around your accounting, then adding on something like this, it still takes work, but you're more capable of doing it if you're already organized with the company setup that you currently have.
Right. Okay. Cool. Okay, so let's talk about this. Kind of rolled me into thinking about expenses inside of those things and how often we see business credit cards and businesses who have like 20 of them. And we're like trying to reconcile them at the end of the month, and it becomes kind of a pain in the butt. And what would you say to these? What do you say to these people who have so many expenses? They have to, because that's what's inside of their company. It is a bunch of transactions going on all the time. How can they keep track of those things? I've seen us do it in like 5 or 6 different ways, but your favorited method. We don't have one. We have good processes for each company that does it their own way. The issue is opening up your American Express bill and seeing 750 transactions from last month, and oh my gosh, how do I swallow that pill?
I mean, it's not a big deal if you're actually spending money on things you need to be spending your money on. I mean, from an accounting perspective, I mean, we got to do what we got to do. We got to categorize stuff.
Well, that's what I'm saying. So would be better, or is the preferred to give every single person their own credit card? Or is the preferred that if our mechanic's going to keep buying parts, he buys parts, tells us what's it for, and we reimburse him?
Well, yeah, I mean, there's certain credit cards that are easier to track. We're trying to move all of our clients towards Ramp instead of credit cards, just because. Yeah. But that's a long-term play, you know, because if we bring on a new client, they're using what they're using currently, so we have to come up with a method for that. But you know, you can take American Express for example. American Express, you can have 10 different cards, but only one of them is going to connect through QuickBooks, and that ends up being a problem, because if you've got a maintenance employee that in a operations employee or an admin employee, and they're spending money in the same places, that you might categorize those things differently. Something might be a material cost, whereas something else might be a office expense. And so that makes the process of answering those questions every month extremely difficult if you don't have the employee level or department level insight into the accounting transaction. And again, look, the objective here is to efficiently get you accurate accounting, an accurate profit and loss statement, so that you can actually understand the truth about how your business is doing. This is not about like, you know, trying to make accounting simple. It's about the result. And
right. So we've touched in previous podcasts the importance of, as your business grows, almost having that liaison between your bookkeeping and accounting department and the owner. Because to bug the owner about Larry's 7 transactions, that seems kind of like busy work for an owner to be handling. But I run into that often where I just don't have that person. And inside of me, I'm like, man, just give me Larry's phone number. I don't even want you to have to deal with it.
Well, they don't care because it's not worth their time.
Right.
And I agree that it's not worth their time. The problem is if they're not putting their financials, if they're not making that a priority, then you're also telling me that growing your business is not worth your time. Right. So you have to look at it as, if you're the business owner, you have to look at it and say, look, if I'm not going to give, let's say, my bookkeeper my time to get my financials right, I'm just committing to staying where I am, because I'm not going to become sophisticated. Now, there's 2 choices. They can get into those details and they could sacrifice that time, which is not going to be used somewhere else.
Right.
Or they can commit to getting somebody to help them, or change some of the processes to make it easier, some of the things we just described, like Ramp, so that they can get their financials done more efficiently. That it's that gap in the middle you're trying to bridge. It takes a lot of work. You know, it's like, so are you going to commit to doing that or not?
Well, and these things come up when you grow.
Yeah. I mean,
you had 2 techs and now you have 15. And how are you going to take care of that?
You're going to break things on your way to growth. That is a known fact.
Taking the time to put those processes together is tedious and it seems useless, but once they're put into place, it just streamlines the process so much better.
Well, this is how we can tell if somebody's poised for growth, because they're doing these kind of things.
Or they're asking those questions.
Yeah, or they've already done a lot of these things. So I think whenever I look at somebody and I'm like, well, if they're at $1 million in revenue or 2 million in revenue and a certain profit, like most people aren't happy where they are, and I'm okay with that. Like I'm generally not happy with where I am because I know I can do better. But are you doing the fundamental things? That's how I can tell if somebody's poised for breakthrough in profitability or revenue, is because they've already checked some of those boxes.
Or they're coming to you saying, I see these problems, help me because I want to grow.
Yeah, they're committed.
Yeah. I think that's good for the day. But I think you did a good job. Good job.
Oh, thank you very much.
You're welcome. Let's see. So let's wrap this thing up and say, if you like what we had to say, please don't forget to like and subscribe. Go follow Phil at CFO Phil, or follow me at Amanda Beyond the Books, and we'll see you later.
See you next time.